So the biggest question, which can be confusing for a lot of people, is Social Security taxable? It depends on your provisional income. Provisional income is the threshold set by the IRS at which your Social Security income becomes taxable. So, what we do is we look at your base income, okay? So, the amounts that you're given for the base income aren't that high, especially with inflation, but I'm just the messenger, so don't come after me, okay?
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey, family, welcome to episode 13. I'm excited to be in the studio today. I just got done celebrating a birthday. Not going to share the number here, but if you follow me on Instagram and Facebook, you already know how old I am now. But speaking of life events, my mother and I have been having some very, very, very interesting conversations. And actually, those conversations are the inspiration for today's episode. Today, we're going to talk about retirement and taxes. See, when I do tax returns, do tax planning, help people with tax relief, these things are almost second nature to me. But my mom has actually given me a completely new perspective where we have hardworking taxpayers getting ready for retirement. They become worried about retirement because, one, have you guys seen the economy with the inflation? And then two, taxes are already confusing, right? So in speaking to her and working with retirees that owe the IRS and can't pay today, I was like, wow, I really need to do an episode on retirement and taxes. So if you know my mom, make sure you thank her. And if you don't, in honor of her, go ahead and share this episode with somebody you know that will be retiring soon. All right? So the main question that we're going to cover today is retirement income taxable? Okay, so we're going to cover that. We're going to talk about the different types of retirement income. And last but not least, we're going to talk about, is Social Security taxable? Okay, because it's not a straightforward answer. It's going to depend on a few criteria. And we're going to cover that at the end of the episode. So make sure you stick around to get that information. And if you need to, go ahead and pause this and grab your pen and paper. All right. So first things first, with retirement income, we have a variety of different types of income. It's actually kind of funny. Even if a person works a W-2 job, when they retire, they may actually have multiple streams of income. Okay, because one, a lot of people, if they don't work for the government, they are contributing to Social Security. Then we also have people that participate, depending on how old they are and the company they work for, they've participated in a pension program. So here in Louisville, Kentucky, I work with people who have pensions from places like UPS, right? FedEx, those different kinds of companies. Or if you work for the government, maybe you have a state pension, all right? Then we have options like traditional IRAs, 401ks, and then also Roth IRAs. So what happens when we are doing tax planning for somebody that is going to retire is we need to take into account what their total retirement income is going to be, and then we need to take into account how much they should have withheld in taxes from each source of income. Now, if you're new to me, that may be a new concept. If you're not new to me, you know I preach this all the time. If you have multiple sources of income, you need to check your withholding. The same is true with retirement income. So if we have tax deferred income, such as from a 401k, 403b, which is your pension, or a traditional IRA, this income is going to be taxable when you pull it out upon retirement, okay? Because it was tax deferred. That means for your traditional IRA, when you make contributions to that account, you didn't pay tax on it at the time. So guess what? When you pull it out, the IRS has been waiting to collect taxes on that money. Now, with Social Security, that's going to depend. It's going to be based on provisional income, which I am going to go into further detail later on in this episode. Make sure you stick around. Episode's only about 15 minutes, okay? Then we have a Roth IRA. Now, this can be confusing for a lot of people. With a traditional IRA, when you make those contributions, the taxes are deferred. So like I said, you don't pay taxes on the money that you're contributing each year. Now, with a Roth IRA, you are paying taxes on the amount that you're contributing. And, to the everyday person, that may be confusing. But the benefit of the Roth IRA is that when you actually pull it out during retirement, you're not going to pay taxes on the amount that you pulled out because you've already paid taxes on it. Over the last 10, 11 years, when I've been looking at tax planning, these two can be very cool. Well, cool for a tax nerd like me, right? When it comes to setting up a tax plan, because when you're putting this money away, we don't just want to bring your liability down today. We want to make sure that you have a liability that's as low as possible over a span of time, right? So if your income right now is going to be higher, and when I say right now, I mean if you were still working, not in retirement. If it's going to be higher than when you're in retirement, you want to talk with your financial advisor to see which one of these plans is going to help you keep the most money. Now, when I do a tax plan, I always pull in a financial advisor because, yes, I know the tax implications of a traditional IRA now, and I know the tax implications of a Roth IRA in the future, but I do not set up those accounts. So you always want to make sure that you have both a financial advisor on your team as well as a tax professional to do the planning. All right. Now, when you were looking at these multiple streams of income, this is where you want to adjust withholding. So when you work a W-2 job, you fill out a W-4. Well, when you pull out pension income, there is a form called a W-4P. This is very similar to filling out the W-4. It's going to take into account when you fill out the worksheet properly, it's going to take into account the income from your pension. It's also going to take into account the income from any annuities you have, from Social Security, and any other retirement income, and let you know how much you should have withheld from that source. What I often see is I'll have retired couples who they always end up with a tax bill at the end of the year. Maybe it's $10,000, maybe it's $13,000. And the whole reason that they have this at the end of the year at tax time is because they didn't fill out the W-4P properly for their pension withholding. Now, you can go to my YouTube channel, which is Timalyn Bowens, America's Favorite EA, and I have a video right now on how to fill out the W-4 if you're married or have multiple streams of income. And coming up shortly, I will be doing one specifically for the W-4P because this is a very, very, very easy fix, all right, to make sure that you don't end up with that unexpected tax bill at the end of each year. You want to enjoy your retirement as much as possible, and that does not include giving unexpected money to the IRS, right? So the biggest question, which can be confusing for a lot of people, is Social Security taxable? It depends on your provisional income. Provisional income is the threshold set by the IRS at which your Social Security income becomes taxable. So what we do is we look at your base income, okay? So the amounts that you're given for the base income aren't that high, especially with inflation, but I'm just the messenger, so don't come after me, okay? If you are not retired yet, you want to keep these things in mind and look at them with your financial advisor when you're preparing for how much you need to have set aside for taxes. If you are not retired yet, but you have a parent that is, make sure you share this with them as well. I cannot tell you how many times off the top of my head I have someone in their 60s, 70s, 80s, and they're on Social Security and they owe the IRS maybe $20,000 to $30,000, and they never told their child that they were having this issue because they didn't have a healthy relationship with money, so they couldn't have those conversations. So even though you may think your parent doesn't need it, send it to them anyway. Because remember, 1 in 50 people have an issue with the IRS. So if it's not them, it's their friend or somebody they know. So let's go back to the base income. If you file a single head of household or qualifying widower, you are going to be looking at a base income of $25,000. Now, why is this number important? Because with that base income, once you go over the $25,000, if you have those filing statuses, again, that's single, head of household, or the widower, once you get past the $25,000, your Social Security benefits become taxable. At that number, so let's say we have $25,100, right? When we get there, we're looking at 50% of the Social Security being taxable. It's important that you adjust for this because if you're underneath, your Social Security is not going to be added to taxable income. But it's when you go over and you have to add that Social Security in, that's when things get interesting. I had a client who was single and they were yet working. So their combined income with Social Security, and they would pull a little bit out of their pension, and their W-2 was around $70,000. They couldn't figure out why they kept owing every year, and actually, it was because they had already started to pull Social Security. You see, they thought their Social Security wasn't going to be taxed at all, but because they were way over the base income, 85% of their Social Security was actually being taxable. So yes, up to 85% of your Social Security can be taxable. Now, there will be situations where maybe you put up for retirement, so you can't avoid this. But if you're in a situation where you don't absolutely need the money and you're still working, I would advise not pulling it yet. So you may be thinking, for standard deduction when you're married, it's usually a little bit higher. The same is true for the base income. If you're married filing jointly, the base income is $32,000. And once you go above that, 50% of your Social Security is going to be added to taxable income, up to 85%, depending on how much your total household income is. So keep in mind, maybe you feel it's too late for you because Social Security income is taxable. Part of your retirement income is taxable. Well, look, you're never too old to learn. If you owe the IRS $10,000 or less and you can't pay today, but you filed your taxes on time, you are now going to go find that W-4P video or use the Social Security tax calculator and adjust your withholding. You can set up a guaranteed payment arrangement with the IRS. I'm going to leave the link to the ebook here in the show notes so that you can go get that and have an arrangement set up before the end of the day, all right? I've had people from various different industries get on and be able to set up their arrangement online within 20 minutes. And if they're fortunate enough to get through to the IRS, they can get it set up on the phone within 20 minutes. So you don't have to suffer in silence. Now, maybe, the problem is bigger than $10,000 or $20,000. You still haven't lost all hope, okay? There's also going to be a link in the show notes where you can reach out and we can see if we're a good fit for me to help you with this, because you're in retirement, you want to enjoy your life, and back taxes shouldn't ruin your life. Now, that's going to be it for today. Make sure that you follow me on your favorite podcast platform. Big announcement, we are now live on Apple Podcasts. So make sure you follow me on the podcast platform and all of my social media. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family, because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.